This interview with Sandstorm Gold CEO Nolan Watson was recorded on Thursday, May 27th, 2021. It was available exclusively for patrons. I spent over 3 hours working on getting this interview edited, all the work needed to make it high quality, so I deserve to get paid for it. If you want more content like this and exclusive interviews with experts on stock picks and also more in-depth research content, information, financial analysis, and financial education, it's going to be behind the paywall compared to these free videos. There is, just in the last 6 or so weeks, 15 articles exclusive for patrons, including extensive analysis on the new deal that Sandstorm Gold just announced for $138 million. And this interview was available within, I think, a week or less of it being recorded. So it got out pretty quickly. But during this interview, he talks about how the higher copper price now will be bringing a lot more assets online in the next couple of years. Those assets are going to get fast-tracked. So again, I highly recommend signing up for my Patreon if you want more in-depth content. There is over 170 now articles, charts, and audio podcasts behind the paywall, and you have a chance to get interviews like this pretty much as soon as they come out, because these take a lot of work for me. If the interview is an hour to 90 minutes long, it could take me 5 to 6 hours worth of work, and honestly, I deserve to get paid for it and make a living from the content, and YouTube makes sure I cannot. Hi, everyone. This is Jason Bjork of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He is the CEO of Sandstorm Gold, a publicly traded company listed on the New York Stock Exchange with over $1 billion market cap and quarterly cash flow of over $20 million per quarter now, with royalties and streams cash flowing on gold, silver, and copper assets. Nolan Watson, thank you for joining me again.
Well, thanks for having me. Appreciate it.
Now, Nolan, the company is just generating a ton of cash. Copper prices, when we're recording this interview on Thursday, May 27th, are at around $4.65 a pound, almost near an all-time high, very close. How much exposure does Sandstorm Gold have to higher copper and silver prices now?
Yeah, that's a great question. We're predominantly precious metals, so gold and silver, but we have exposure to copper in a couple of different ways. The first is we have a couple of streams or royalties on copper assets. And so we've got probably 15% of our cash flow is currently exposed to copper. So as copper prices go up, our cash flow goes up. And certainly as copper prices have gone up, our cash flow related to copper is going up as well. There's sort of a second way that we're exposed to copper as well, which is we have either royalties on copper gold mines, or in one particular case, we have the right to buy a gold stream on a mine that is predominantly a copper mine. And the question as to when those mines go forward and when they get built is a question of the economics, which gets down to what is the copper price. And so as the copper price is going up here, we're starting to see a lot of those projects get fast-tracked into production. And so we'll be exercising those options to buy gold streams on those projects, which are deep in the money. And so we think that as the copper price is going up, we're going to be making more money, ironically, from gold because those copper projects are moving forward faster.
Actually, you started answering part of my next question. I was going to ask if you're already receiving information about projects that are going to be fast-tracked in the Sandstorm Gold portfolio that are not cash flowing, because I know there's a number of silver royalties and also gold royalties on base metal mines that your geologists have spent a lot of time and effort collecting over the last 6 or 7 years, acquiring them with good exploration upside that are not priced into the stock right now.
Yeah, absolutely. And as the copper price is going up, we are starting to see some of those assets move forward more quickly. So for example, Kinross has an asset called Lobo Marte in Chile, which if you would have asked me 2 years ago when that's going to go into production, I would have said, I have no idea if it's going to go into production anytime soon. But you fast forward to today, and that asset looks like it's being fast-tracked into production now. We don't have definitive or clear timelines based on, the company is still being coy as to the exact dates, but it looks like that project is a go. And then Yamana has their Mara project in Argentina that we have a right to buy a $240 million gold stream on. And that option to buy that stream was priced years ago, back when gold was $1,200 an ounce. And so sitting here today, gold at $1,900 an ounce, that option is way, way, way in the money. The stream is worth what we believe way more than the $240 million, probably closer to a $300 million now. We'll see. We haven't seen the final feasibility study out. It's being done right now. And when that study comes out, we'll have a much better sense of both the timing of the project and what we think the NAV is. But certainly in an environment like today, where you've got situations where gold streams typically seem to be trading at 1.5 to 2 times their inherent net asset value. If the net asset value of that stream gets close to $300 million, depending on what gold price you use, that means it's worth $400 million to $600 million. And we have the right to buy it for $240 million. So we're deep in the money on that option, or the value of that option. And that project's being moved forward a lot faster than we otherwise would have thought it would. Again, partly because of the copper price. So this is a good environment. We made a lot of long dated optionality type bets years ago, and they're starting to pay off now.
Yeah, what I'm noticing, paying attention to some of your partner companies with royalties and streams, either ones that are already cash flowing or about to be, is there's a ton of investments being made that over the long term are really going to benefit Sandstorm Gold shareholders. So for current producing mines, you're seeing companies like Lundin Mining with Chapada talking about making big investments into Chapada. I think there was a $230 million upgrade plan that Sandstorm Gold will not have to pay a cent for to benefit. So if the stream on Chapada increases and there's more exploration budget on Chapada and they find more copper, then that's going to benefit Sandstorm Gold shareholders, and the company won't have to pay a cent for any of that additional cash flow or upside.
Yeah, exactly. When we first did that stream, I guess about 5 or 6 years ago now, it had about a 20-year mine life. They've been mining for 5 years. So you'd think the mine life would be down to 15 years, except they've had so much exploration success so far already. The mine life, I think last time I checked, is up to about 32 years and growing fast. And so now they're looking at increasing the throughput so that you'd have actually more production per year as well. So I think we're going to be winning both ways there.
And there's around half a dozen, I think, companies that are either have already made or are making big investments into their mines. Another one is Lundin Gold with Fruta del Norte. I think they're going to increase production by around 20% by the end of this year. And again, Sandstorm Gold doesn't have to pay a cent for any of that additional cash flow or exploration upside in any more gold that's found.
Yeah, that project's a good example of one of the strategies we've been using for a number of years now, which is trying to get exposure to projects that have huge land packages and abnormal amounts of exploration upside because of the nature of the types of geological deposits that they are. Our geologists thought that there's a lot of low-hanging fruit of new gold ounces to be found at that project, and there's over 400 square kilometers, which is an enormous landmass. For them to find new gold ounces. And so we've only owned that royalty for a few years now, and they're already finding more gold and already, as you said, expanding the plant. And those are the types of royalties that we love, and the royalties that we're trying to buy, which is on the day you buy it, it might look like an okay deal, but 3 years later, 5 years later, 7 years later, it just looks like a home run because you're getting more gold, the gold price is higher, and you're getting it for more years.
Yeah, we're seeing a lot of examples of this. Another one is Equinox Gold on the Arizona mine. It looks like there's going to be an underground mine added to the open pit there, and they haven't reported on the Greenfields exploration deal yet that they were doing with Anglo Gold Ashanti. So there's just a ton of exploration upside in the portfolio. And then you have these producing miners making investments into the mill upgrade. So that's probably going to happen first now with these higher metals prices, is the mining companies are going to upgrade their existing mines, mill infrastructure there, increase production at the existing mines before they bring new mines online. Is that what you're seeing?
Yeah, we're seeing that all across our portfolio right now. It's a blessing and a curse. The blessing is that these mining companies are making so much money that they're investing heavily into exploration and into expansion of their projects. So all of the existing royalties that we have are becoming worth way more. The downside, this is the curse part of it, is that all the mining companies have lots of access to capital. And so trying to acquire new things right now is a lot harder than it was a couple of years ago when there was much less access to capital and companies were making much less money. So we are accumulating cash fast. We're making tons of money. The amount of money we're making per year is going up as production rates are going up, as new mines come on, and as commodity prices are going up. So we have record cash flow and record profitability. And the question turns to making sure that we stay disciplined in how we allocate that capital going forward.
Is it a lot easier now to adapt to changing market conditions than in the past, considering all the monthly cash flow the company has, the access to credit with its revolving credit facility, cash on the balance sheet compared to the past?
Yeah, we have so much more flexibility now in how we operate the business, just because we have not only so much cash flow, but it's diverse cash flow. So it's coming in from mines all around the world, largely precious metals and gold, but also silver, and it was, as we said, copper, and different operators in different countries. And so it's just a stable portfolio that's just generating lots of cash, and the amount of cash it's generating is growing. And because of that, banks are willing, they're falling over themselves to lend us money. And we're in the process right now of probably amending our revolving credit facility, which is undrawn. We don't have any debt right now. We're a totally debt-free company, but probably something in the realm of $300 million of just basic, plain vanilla revolving debt that you can just draw on 24 hours notice. And so because the portfolio is so diversified and so stable, banks are willing to give that credit. I'm a big believer that traditionally having debt in a company in the metals and mining space doesn't make a lot of sense, because you don't control the price that you sell it at, and you're at the risk of the markets. But right now, I believe that you don't want to be holding cash very long, and it's better to be holding debt to buy real assets as inflation kicks in, and as the value of those real assets are going to grow and inflate over the next number of years, and your debt becomes devalued as the dollars are being devalued because governments are printing money. That I'm very much of the mindset that I want to deploy all of the capital that we have into real assets and potentially draw down on debt and let the central bankers just make profit for us and for our investors because of it.
I think Sandstorm has done a very good job over the years of being very efficient and careful and strategic using debt. You don't take on too much debt. You try to take on less than a year's worth of debt normally. In the past, when the company was smaller, they did do some equity dilution to pay off some debt. But once more cash flow came online from the other investments and assets, the focus was on having under a year's worth of debt so the cash flow could pay it off. And I think that's very similar to how a real estate investor uses debt when they just want to buy more rental properties or they want to buy more real estate, because they just keep accumulating quality assets and then paying them off with cash flow and then using debt to buy more assets and paying it off. And I think over time, that's a winning strategy in different market conditions.
Yeah, it's definitely worked for us so far. Like I said, I'm pretty debt averse. There is a time and a place to use it, though, to avoid dilution for shareholders, and so we're going to continue operating that. I mean, if we ever got into a situation where it was going to take us more than 3 years to pay off our debt, that would shock me. It would have to be such an incredible asset to make us want to take that risk, compared to other mining companies that'll enter into debt agreements that it'll take them 7, 8, 9, 10 years to pay off their debt. You'll never see Sandstorm do that. We like to be prudent. We're not so risk averse that we're going to be irrational in how we form our capital structure, but we certainly are going to be conservative.
I want to talk a little bit about some of the other royalty and streaming companies, because lately it seems in the last year or two, there's so many more small royalty and streaming companies with market caps of like 10 million, under 100 million. There's so many. I get emails and messages all the time from people listening to my podcast and patrons asking about royalty and streaming companies. And I've never heard of them. They just bought 1 or 2 assets. Maybe they bought a royalty package with a tiny amount of cash flow. I want to talk about valuations on the deals now. So it seems to me that there's too many of these small royalty and streaming companies now. And it seems they don't care about what price they pay in a lot of sense. It seems that there's a lot of bidding wars for these royalty packages, and a lot of these packages don't even have any cash flow. Is that what you're seeing, that these small little companies are just getting in crazy bidding wars, bidding up these small packages that in the past, Sandstorm Gold years ago could have bought, similar to the deal that Sandstorm Gold just announced in the last couple of weeks, that 21 royalty package in Nevada and Montana. They bought it for $8 million. I don't know if you had a bidding war or not on it, but in the past, you could have done more deals like that. But it seems recently I've seen a lot of press releases from the smaller companies where these packages are going for way over $8 million. They're going for 3, 4, 5, 6, maybe even 7 times what Sandstorm Gold paid. Is this kind of the new normal now?
Well, you're absolutely right. There certainly has been a proliferation of and creation of new royalty companies over the last 2 or 3 years. It's my personal belief that too many companies have been created, and they're being created because the average retail investor appears to be not very sophisticated about the quality of the underlying royalties and what those portfolios are. And most of those royalty portfolios aren't actually cash flowing very much. And so you have a management team that's overly promotional, and they're almost selling a Ponzi scheme, saying how much money they're going to make once their royalties start paying. And so I'm seeing companies out there right now that are trading at 200 times cash flow in the royalty space, just because the CEO is overly promotional. And eventually there's going to become a reckoning that just investors are going to lose money on those things. It actually kind of reminds me when I was younger as a teenager and the snowboarding industry was just coming into its own. And there was really only 3 material snowboarding companies in the world. And my dad was president of one of them, and they're all making quite good money. And then overnight, it took about 5 years. And then there was about 500 snowboard manufacturing companies, and all of them were losing money. And you fast forward to today, and probably 480 of those 500 are out of business. And it's back to the industry is mature, and it's back down to a reasonable number of intelligent companies that are running them like real businesses. And I think you're gonna see that in the royalty space. And the fortunate thing for Sandstorm is we've already hit escape velocity. We're making just shy of $100 million of free cash flow a year. And fortunately, because of the nature of our business, we can be patient. We can sit on our hands if we need to, and we'll just keep making profit because of the existing royalties that we already own. So we don't ever have to be overly aggressive if we don't want to. Now, having said that, we have a large corporate development team, and we are finding every now and then still value. Like you said, we just bought a royalty portfolio that typically royalty portfolios are trading at 1.5 to 2 times NAV right now. And we just bought one for what we believe is closer to 0.5 times NAV. But part of the reason we were able to do that was because we had existing relations with the vendor. It didn't go to auction. We have other business with them. They want to maintain a close relationship with us. The deal just made sense for them, and it made sense for us. So we are still able to add value and pick our spots. And we'll be aggressive when we need to, but we're not going to be stupid. And if these other people want to blow themselves up, starting new royalty companies overpaying for things, we'll be happy to sit there and watch them blow themselves up, and we'll pick up the pieces when reckoning day comes.
Having learned the royalty business now for over a decade, covering it, lots of different companies, learning it from you, interviewing you over the years, it seems that the business model really doesn't work unless a certain amount of scale is achieved. There's a certain amount of diversified cash flow assets in the portfolio. Otherwise, there has to be too much share dilution. And it seems that a lot of these smaller companies are not being penalized at all for the share dilution. I'm seeing, I won't name the company, but I wrote an article up on it for patrons. The stock was at one point, even though gold prices earlier this year were still falling, the stock was still going up. It was the outperformer. People were telling me how good the stock was. I did some valuation analysis on it. It was trading at 140 times sales. And I was looking at articles on Seeking Alpha and elsewhere, and it was saying how undervalued the stock was. And I was just scratching my head asking, what am I missing? And it seems exactly like you said, it was all marketing and promotion. And the analysts covering the stock, the mainstream analysts, were all they were looking at the stock price and seeing it going up. And they were like, it was reverse engineering, I would say, justification for why the stock price is high and going to go higher, rather than saying this share price versus the fundamentals. This is 140 times sales for almost no cash flow and almost no immediate cash flow, no current cash flow, and very little future cash flow in the near future.
No, it is. It's exactly like you described. And these analysts that you made mention of, I think what the average retail investor doesn't quite understand is how perverse the relationship still is, even today in the year 2021, between research analysts and the sell side sales teams at the various investment banks around the world. For example, we could have at Sandstorm a bank and an analyst at that bank rate Sandstorm as a hold, because we've gone and told those banks, when their investment bankers walk into our office, they'll say, hey, Sandstorm, we can raise you a bunch of money. Do you want us to launch you an equity financing? We could raise you $100 million tomorrow, which I get those meetings every single week. And my answer every single week, and it's been that way for years, has been, I don't need the money. Why would I dilute my shareholders if I don't need the money? No. And their analysts will go, okay, well, we're not going to make any money off Sandstorm. And so it doesn't really bother me if I piss them off. So I've got to have some buy ratings and some hold ratings. So I'm going to put a hold on them. If I walked around to all those same banks next week and I just said, hey guys, Sandstorm's thinking about raising money. We would really like your bank to think about the fees that you could make off of us raising money. Those analysts are going to change their ratings to buy, because if they piss us off, then we're not going to choose them to lead our equity financing, and they're not going to make the fees. That's one of the things that the retail investors don't understand, is that some banks will put a buy rating on a stock if they think that company is going to be raising lots of equity. They're not allowed to do it. It's not legal, but it is how it works. And it's just one of those things. You can have a company, like you said, trading at 140 times sales. And this isn't a tech company that's about to magically blow up. We're talking mining companies where they're just mining companies. And they can trade at 140 times sales and still have a buy rating if the bank thinks they're going to make money off of them. That's unfortunately how things work. And there will be a reckoning day, and those investors will lose money. It's sad, but it's just the way it is.
Do you think it's easier to do deals when metals prices like copper, gold, and silver prices are falling?
Absolutely. Yeah, it's so much easier. When the other CEOs are fearful, and also when the investors of those other companies are fearful, and they're less likely to write equity checks to help them achieve their goals, to build new mines, to buy new mines, those types of things. Also, lending banks get more nervous when commodity prices are falling. And so access to capital gets restricted quickly in falling commodity price environments. So we're able to do deals much more easily when commodity prices are falling in it. And you can still do deals when commodity prices are going up, but you have to pay up a lot. So what we found over the years is that when we're finding it hard to do new deals, that's okay. The reason that it's hard is because we're not willing to pay the prices that other people are transacting on. And we're happy to just keep making money and deploy the capital if commodity prices are lower. Now, we're in a little bit of a different situation right now today, because I just think commodity prices are just going to keep going up for a while because of the debasement of the currencies. And so I am a little bit more antsy to get off. We're sitting on $150 million of cash at the moment. And so I am looking for ways to try to deploy that in real assets without having to overpay for real assets.
And in 3 quarters or so, that might be $200 million in cash. So that's going to be a lot. That's a really high percentage of your market cap. If it gets to run $200 million in cash, I mean, people are going to start wondering, when are they going to do the next deal? Because a lot of people, unfortunately, this world, Nolan, is what have you done for me lately? When I look at Sandstorm Gold's fundamentals, the fundamentals of the company, the underlying business with the royalties and the streams, the cash on the balance sheet, the cash flow, the exposure that most people don't understand to copper and silver prices too. The fundamentals of the company have actually never been better. So in my opinion, they've never been better. This is a really sound business. The stock price for the last 14 months has gone up and down a lot, and that's pissed a lot of people off. But I think the company has been a victim of recency bias, because the last major deal that Sandstorm Gold did was October or November of 2019. That was the Relief Canyon streaming package from America's Gold and Silver. So that's been a while in people's memory since the last time Sandstorm Gold did a sizable deal. And you've seen a lot of the competitor companies in the royalty and streaming space, they're all doing deals.
Yeah, they are doing deals, and we think some of the prices they're paying are overpaying for it. So, we're happy to let them overpay for certain things. But I do agree with you that the market is a what have you done for me lately business. And I think, this is just my personal opinion, and most investors don't necessarily agree with me, but I think sometimes boring is sexy, in the sense that if you can be just a stable, reliable company that keeps growing cash flow year after year, and it's diversified and the business just keeps getting better year after year after year, that's the kind of company that I want to own in my retirement portfolio. Now, having said that, I do agree investors want to see us allocate capital. So we did buy a small portfolio of royalties just a few weeks ago, as you mentioned. We are working on some transactions right now that are at quite advanced stages. One's in gold and one's more in a base metal or bulk commodity. But we will be deploying a reasonable portion of our cash this year into real assets so that we can take advantage of the inflation that central bankers are making.
Has the timeline for Hod Maden with the feasibility study, the environmental permits, has it changed very much, or are we still going to be getting some positive news developments in the next couple quarters?
Oh, I absolutely expect us to be getting positive news developments in the next couple of quarters. In Turkey, there was a very stringent lockdown and all the government workers had to go home. So permitting got pushed back by a month or two, but they've just released that lockdown. Things are back in full swing. I got an update last week that suggested that things are at a pretty advanced stage. And so I don't know, our original guidance before all the COVID lockdowns were happening was that we should be able to put out the fact that there's an EIA permit granted by the government and a feasibility study by the end of Q2, so call it end of June. I think there's a chance that slips into Q3, but it's still our view that both of those things are imminent. There's not going to be we would be very surprised if there was a big delay in either of those things.
And here's one thing I haven't seen anywhere else, because I've been following this asset for a while now. Hod Maden has fantastic copper grades. So with these copper prices, Hod Maden, the project economics for Hod Maden are going to be even more robust, because if I remember correctly, a lot of the feasibility studies, a lot of the past economic studies for Hod Maden had around $3 or $3.50 copper. We're much higher than that, Nolan. And this mine is mostly a copper mine with some gold. It has a decent amount of gold, but there's a ton of copper in there. So the project economics for that mine are going to be extremely robust if copper prices stay at these levels.
Yeah, at these, it changes. At these levels, copper represents about almost 25% of the mine cash flow. So it's about 75% gold, 25% copper. And at previous commodity prices a year ago, you would have said it's more like 80% gold and 20% copper. But the copper and the gold grades are so rich that just that 25% of copper pays for all of the mining costs. And so you're basically just getting gold for free, which is a pretty nice place to be.
You might get in trouble for saying that. Gold for free. Hopefully, we don't want governments hearing that, because then governments like in Chile or Argentina or some of these, in Chile or Peru, they're going to start putting new royalty taxes on the mines.
Yeah, that's true. Governments are very good at doing that, but.
Well, yeah, they're looking at these copper miners, right? And they're looking at the investor presentations too for these copper miners and seeing that the all-in sustaining cost for some of these copper miners are $2 a pound or under $2 a pound, and looking at the copper price and seeing that these companies are minting money.
There's one thing the governments are good at. It's trying to hike taxes higher than they should be. It doesn't matter what country you're in. It doesn't matter what industry you're into. It's unfortunately the two constants in life are death and taxes, and we're well aware of that in the mining industry.
Let's add currency debasement and inflation that governments lie about. So yeah, inflation, which is a stealth tax. So inflation and taxes. Inflation is a tax, but
exactly.
So as we wrap up the interview here, what catalysts for the rest of 2021 do you think people should be paying attention to for Sandstorm Gold? Because it's probably too early in the year to start paying out a dividend. I would personally like to see another couple deals done before a dividend. You talked about maybe early next year on the last conference call about starting a dividend. But if there's deals to be made, do the deals now, pay the dividends later when metals prices are higher.
Yeah. So in terms of a dividend, I think that if not at the end of this year, then certainly next year. I have talked to our board behind the scenes. No official decisions have been made, but what I can say is they are much more inclined to imminently pay one now than they were a year or two ago. So that is going to be happening. The question is when and how much. But in terms of other catalysts, we think one of the two boring catalysts that happen to be my two favorite, but some investors find them boring catalysts, is that we're having record cash flow quarter after quarter, and we're going to keep making lots of money here in this environment. And our partners, as we mentioned at the beginning of this interview, our partners are also getting record cash flow, and they're investing in the mine. So they're starting to do record amounts of exploration and record amounts of mine development. So, the catalyst is going to be more and more and more and more gold is going to be found for free to us on these projects, which is a really important catalyst for us. And then doing new deals. I said this on our last investor call, that although I don't want to get into the specifics and I'll let deals talk to themselves, we are going to be deploying capital this year. I think last year we only deployed $10 or $20 million of capital, depending on how you count it. But this year I definitely expect it to be several times higher than that, and probably closer to one of our record years in capital deployment. And so I think that those will be important catalysts. And then you mentioned it earlier, but the Mara project and our ability to potentially exercise our option into that large gold stream, that has the potential to be another catalyst. Hod Maden getting an EIA, I think, would be a huge catalyst. What we've seen is a couple of Canadian companies have real challenges getting permits in Turkey. And a lot of investors are unsophisticated, not realizing that those are just Canadian guys trying to build enormous open pit mines where they're going to have to cut down tens of thousands of trees. And rightfully so, they're having trouble getting permits. Whereas we've got this incredible deposit where virtually nothing has to get cut down in terms of trees. There's virtually no communities anywhere near site. And we've got a local Turkish partner that's a multi-billion-dollar conglomerate that's really good at getting permits. And they tell us that they're going to get the permits within the next couple of months for the EIA. And we believe them, but the proof is going to be in the pudding. And so I think when that actually comes out, I think people are going to be shocked that this project is moving forward. It's moving forward fast, and it's going to happen. And I think you'll start seeing us re-rate pretty quickly on the back of that.
If there was actually a bidding process for a gold stream on Agua Rica or Mara, how much money do you think it would sell for? It would sell for a lot more than the costs that are capped, right? That you paid the option.
Oh, yeah, absolutely. It's really hard to guess at that number because I haven't seen the feasibility study, but in absence of that data, I think it would be 300 and something million today. And if you're talking about, if they do push the project forward quickly and they do get the asset into production, once that asset's into production, I think, the sale price probably starts with a 4 or higher. And so we're deep in the money on that option.
Yeah, it's over 20,000 gold equivalent ounces on that gold stream per year. So it's a very sizable stream. That's something that the big boys, the Franco-Nevadas, the Wheaton Precious Metals would be interested in if it was available to bid on.
Exactly. Now, one of the unique things that we do have there is the ability to syndicate a portion of that stream at our sole discretion. So if for whatever reason we found other good deals, we wanted to invest all of our capital buying other gold streams, then we wanted to borrow money on our revolver and buy even more streams, and we were out of capital and we wanted to exercise this option, we could walk down the street to one of our other competitors and say, hey, you guys can give us $240 million for 50 or 60% of this stream, and they can pay the option price for us, and we can ride the rest of it for free without having to put any incremental capital in.
Yeah, I wrote an article on this. There was a number of different ways that the value could be unlocked for Sandstorm Gold shareholders, and I don't think any of this is priced into the stock right now.
No, not at all.
I don't even think, honestly, Nolan, I don't think Hod Maden's priced in. I've actually had people tell me that Hod Maden has a negative discounting on the stock right now.
I believe that's true, actually.
Well, again, this is a what have you done for me lately? So until the cash flow is actually hitting the top and bottom lines, then then I guess most people don't believe it.
Yeah, it's one of the things that I've actually found over the years that the market is dislocated the most in is issues of probability assessment or misassessment and probability of timelines. And if something is 5 or 6 or 7 years out in the mining industry, investors almost value it as just a zero. And even if it's an incredibly valuable asset. So I don't mind making some of those longer dated bets and allowing our shareholders who are patient to profit off of those things. And so we made this bet a few years ago, and the shareholders who have hung in there are going to profit off of it. And that's the way it should be.
Do you think that the higher copper prices are going to help eliminate the red tape that's happening in Mongolia with a lot of their copper mines? Because you've talked about this in interviews where the Mongolian government makes a lot of noise and always wants to renegotiate the royalties and how much they're getting. But do you think that a higher copper price, more profits at Oyu Tolgoi and Turquoise Hill, is that going to fix a lot of the problems that they've been having there?
Well, certainly in that particular case, there have been a lot of capital expenditure overruns and a few hiccups that they've had. So they've needed more capital. But the higher copper prices are sort of covering a lot of those sins and are now paying for a lot of those cost overruns. So what looked like there was going to be a reckoning day between the company and the Mongolian government to figure out who was going to pay for what. And the copper price is kind of solving a lot of those problems. So I do expect that asset to keep moving forward. And that's actually a good example. Is one of the things that we have in our portfolio that nobody pays attention to or nobody has any idea of is there's a company called Entrée Gold in Vancouver that a large portion of that deposit, the Oyu Tolgoi deposit or the Turquoise Hill deposit, is covered by Entrée's ground, and Entrée has a 20% free carry joint venture interest in it. Sandstorm has a stream on some of the gold and some of the copper on that ground through Entrée. And Entrée themselves as a company, although they're cash flowing nothing now, and they won't be mining on that ground for several years, and it probably won't be until, say, 2028, that they actually start getting cash flow from the mining that's being done on the ground. Once they start mining on that ground, the expected cash flow is expected to be over $100 million a year to their credit. And what our investors don't really realize is we own probably 26% of Entrée. I mean, that would be over $26 million a year of incremental capital to Sandstorm when they start mining on that ground, if all we did is just sit there and collect our dividends. And there's a lot of hidden value in Sandstorm, and that one's a good example.
And another one in Mongolia that looks like it's close to mine construction is Erdene. That was another looked like potentially hidden gem that the Sandstorm Gold geologists found.
Yeah, that one worked out quite well as well. And I think they're working right now on putting the project financing to go build that mine, and we own a royalty on it, which is great.
Well, as we wrap up here, Nolan, there's been a few people talking about insider selling in Sandstorm Gold. Can you just address this publicly?
Yeah, so I think one of the things that shareholders don't realize is how, for example, restricted share units work, which is one of the ways that I'm compensated. So, for example, last year, I took no bonus at all. Variable compensation was in the form of restricted share units, which is in Canada, the way it works is it goes, here's a share, but you can't touch the share until it vests. And once it does vest, you can choose whether or not you take it as a share or you keep it as a restricted share. And so I've been accumulating those over the years. And in my particular case, I'm starting to get incredibly bullish on Sandstorm stock price. So I've had a number of restricted share units vest. And so when the share price goes up, if I one day say, hey, those restricted shares, I want them now as actual shares, I have to pay tax at the full top marginal income tax rate at the value of those shares on the day that I receive them as shares. And because Canada is turning into what appears to be a semi-socialist country, my tax rate is 54%. So when I receive those shares, the government takes 54% of the value from me. And any share price appreciation after the day that I take it as shares, it's a capital gains tax. So my tax rate is half. So if you're really bullish on the share price appreciation, what you should do is take those restricted shares, turn them into shares today, pay the 54% tax on the share price today, and then hold them as shares for the share price appreciation, so that any appreciation going forward is capital gains tax at half the tax rate. So I just recently did that. I just took every restricted share unit that I had that had already vested, and I said, give it to me today. I'm going to pay the tax bill today, which is 54%. So I had to sell just over half of those shares to pay my tax bill to the Canada Revenue Agency. And then I'm just holding those shares, and future share price appreciation, the Sandstorm share price goes up, will only be taxed at half the rate. So hopefully by doing what I just did, I'll save a bunch of tax and I'll end up making more money off of Sandstorm share price appreciation. So I think some unsophisticated shareholders just saw, oh, the CEO sold some of the shares that he received. But no, I didn't. All I did was pay the tax bill so that I could hold all of the rest of the shares and keeping all my money on the table.
That makes perfect sense. And unfortunately, with tax laws getting more and more complicated and governments trying to tax anyone making a profit more and more, it just keeps getting more and more ridiculous. But a lot of my listeners do look at the website Canadian Insider, so they just see the selling and they don't understand why. So thank you for explaining that.
No problem.
Last question here before I let you go. Do you think there's going to be a lot of new copper and gold mines built in the next couple of years? Or is there not a lot of good projects out there? Because it seems that there's a lot of potential new gold mines, but gold prices, a lot of the costs for these gold mines are $1,500, $1,600. Is that what you're seeing for the cost, or are there actually lower cost gold mines that are going to get built in the near future?
There will be some. What I do see is a little bit more out there in terms of projects waiting in the wings in the gold side and the copper side. There are not a lot of great copper mines sitting in the wings around the world waiting to be built. Don't get me wrong, there are some, but I just don't see with the amount of copper that the world is going to need to fully electrify over the next 30 years, I do not see where that copper is going to come from. So there's going to have to be much higher copper prices longer term to incentivize the discovery and building of high capex mines. And because there's so much inflation right now, the cost of all of your inputs for building a mine are going up. Steel's going up, diesel's going up, labor's going up, energy's going up. And so building these mines is getting even more and more expensive. So you're going to have higher and higher copper prices to incentivize the building of these mines. So I do think that there's a lot of support there. There are a few more gold mines ready and waiting to be built if gold prices continue to go up. But these days, it takes so long to get permits sometimes. A lot of these mines that have been sitting there in limbo, you can't just snap your fingers and turn them on. It takes years to do that. So we could see substantially inflated, not overvalued, but just substantially increased gold prices for a lot of years before it really causes any incremental supply.
So that's why there's not as many potential new deals, is because these juniors that are moving things along with the economic studies, it's going to be years before they get their permits then?
Yeah, often a lot of these early stage guys, and there are some countries like Mexico, you can still find a mine and permit it and build it all in a 4-year period. But most countries, from the time that you discover the mine to the time it's in production, it's usually a decade.
Yeah, I've seen that number quoted a lot for copper and gold, and especially with the capex for these open pit mines, because it gets very, very expensive when you're building things out at scale and there's not existing infrastructure there.
Yeah, exactly.
What about for new silver? Are there silver byproduct deals available? Because people always ask with Sandstorm Gold silver exposure. Sandstorm Gold has good silver exposure already with the Cerro Moro silver stream, but people are always asking if they can add more silver exposure.
Yeah, we really like silver. And I started my career at a company called Silver Wheaton, and so I've been following the silver market for a long period of time. Silver is a really small market, and it is really hard to get exposure to it. A lot of it is produced as byproducts in either copper mines or zinc mines or gold mines. There are almost no predominantly silver mines in the entire world. So the amount of silver that's going to be produced is always going to be a reflection of the amount of other metals that is produced. There are some opportunities to add silver exposure, and if we can, we will, but we're not seeing a huge number of opportunities in silver, unfortunately.
Yeah, I mean, Sandstorm already has, isn't it, an MPI net profit interest on one of Alexco's mines? I think it's buried deep in the portfolio there. Most people aren't even aware of it.
Yeah, we have that one. And like you said, a lot of our our silver production right now is coming from a Yamana asset that's cash flowing us over $20 million a year of just cash flow from silver.
Well, Nolan, I want to thank you very much for answering a lot of my questions. I asked you some difficult questions about the insider selling and others that people were bringing up to me about negative parts of the company. I don't think there's anything negative about the fundamentals of the company. The company's just throwing off cash, has what, $7 or $8 million a month now in monthly cash flow, good amount of cash on the balance sheet. I would like to see another deal, but if the market conditions are not favorable, it's better just to hold the cash than to do, as you said in the past, a growth for growth sake deal where you overpay for an asset, even though that might move the stock price up in the short term. Long term, that's probably going to hurt shareholders, wasting capital.
Yeah, we're a patient management team, and like you said, I think the only material knock right now is that some investors are bored and they want to see new deals, and we're going to think about this long term. I plan on still being here running a company 10 years from now, and I want this company to be the best that it can, and we're going to make the best decisions for long-term shareholders that we can.
Well, those share buybacks that were done a little over a year ago when the stock market crashed and the Sandstorm Gold share price crashed around $3 or $4 a share, those are looking pretty smart right now.
You'd be surprised at how much criticism I got from shareholders when we were buying back shares at $3 a share. And yeah, to your point, it's looking pretty smart right now.
That's the thing about share buybacks. Share buybacks piss off a lot of people, though. I mean, dividends put cash in people's pockets, even though they're getting taxed at crazy rates, like here in the US and other countries. Share buybacks do piss a lot of people off, though, even though a lot of people, including myself, if they're done smartly and strategically without too much debt and at the right time, if the share price is cheap, I think they're a more efficient use of capital.
Yeah, I agree entirely.
Great. Well, thank you so much for your time today, Nolan. I always enjoy my conversations with you. I learned so much. I'm going to have to go back and re-listen to this interview myself a couple times to get some more tidbits about the royalty and streaming industry. And if my listeners want to learn more about Sandstorm Gold, maybe check out the asset handbook. How do they do so?
Yeah, you can just go to our website, sandstormgold.com, and click on the assets section. And we've got a very, very useful interactive tool. You can literally look at every single material royalty that we own and who owns it and where it is, and look at maps, and you can learn as much about us as possibly could be known through that.